Welcome to the MUFG Global Markets Podcast. I'm John Cook, and I'm joined today by Takahiro Sekido, Chief Japan Strategist for MUFG. It's Monday, October 19th, 2021. Welcome back to the podcast, Sekido-san.
Good to be back.
Yeah, great to have you as always. So let's start things off. So the Japanese Ministry of Finance recently released the international transaction in securities data for September. Why don't we open things up by taking our listeners through the report? I'd be curious what it tells us from both a overseas buying of yen securities perspective as well as a Japanese buying of foreign securities perspective.
In September, Japanese were big net buyer of foreign securities by 4.6 trillion yen, according to the data released by the Minister of Finance on October 8th. This included strong net buying of medium to long-term bonds by 4.6 trillion yen, followed by net buying of foreign stocks and investment fund holdings by 194 billion yen. Japanese unloaded a net 205 billion yen of short-term foreign bonds, turning net sellers. By investor type, Japanese banks bought 2.8 trillion yen, while pension funds, trust banks bought 753 billion yen of medium to long-term foreign bonds. Lifers net bought 261 billion yen of foreign securities, largely driven by 253 billion yen of medium to long-term bonds, showing a clear return to net buying of foreign bonds. Overseas investors unloaded a net 2.6 trillion yen of Japanese securities, including 1.3 trillion yen of medium to long-term bonds, 1.2 trillion yen of stocks and investment fund holdings, and 68 billion yen of short-term bonds to end the quarter. The MOF, securities, and balance of payment data for July to September shows that overseas investors bought 3.2 trillion of yen bonds during this quarter. They remain big buyers, following on from 5.7 trillion yen in April to June. Overseas investors have been net buyers of Japanese medium to long-term JGBs in fiscal year 21, except for in September, a redemption month. They net bought 837 billion yen of short-term TDBs, September 26 to October 2nd. Short-term TDB arbitrage trading has been picking up among the foreign investors because of the year-end premium in a 3-month dollar forward. While the year-end premium is around the same level as in fiscal year 20 and fiscal year 21, the reasons differ. In fiscal year 20, key central banks were collaborating on monetary policy, while in fiscal year 21, a glut of global funds helped to stabilize year-end US dollar financing costs with yen basis for Japanese investors.
Yeah, a lot of good points there that I kind of want to emphasize. So in terms of Japanese investor activity in foreign bond markets, huge buying in September. In fact, I think I looked at this and the purchases by banks was the most since November of 2020. You also mentioned the pensions did some good buying, and now lifers back in foreign bond markets buying for the third straight month. Overseas investors activity in JGBs, really great points. I mean, there's been huge buying of term JGBs by overseas investors, for the last 2 quarters, but that's recently sort of shifted and there's been more focus in the front end. So I guess my follow-up question is, the weekly data, does that suggest these patterns have continued in October? Yes, no, how have things changed?
Okay. Between September 26th and October 9th, Japanese investors bought more foreign bonds, while foreign investors bought more short-term yen bonds and Japan stocks. Japanese investing flows dominated. Japanese net bought 2 trillion yen of overseas securities, while overseas investors net bought 1 trillion yen of Japanese securities. Japanese net bought 1.3 trillion yen of medium to long-term falling bonds and 644 billion yen of stocks and investment fund holdings and 60 billion yen of short-term falling bonds. Japanese accelerated building their falling stock and bond positions across the board. Foreigners net bought 1.7 trillion yen of short-term yen bonds and 680 billion yen of Japan stocks and investment fund holdings, but unloaded a net 1.4 trillion yen of medium to long-term yen bonds. Overseas investors returned the TDB battlegrounds from JGB sites.
Okay, so it looks like that trend has continued, but it's interesting that you say the the Japanese investment overseas has dominated. I guess you can see that in dollar yen basis, 3-month dollar yen, widened out to -20, over the turn and has continued widening. I think it was last somewhere around -24. So that's certainly evidence that Japanese buying of overseas securities has continued, as exactly you say. So let's move on a little bit. Switching topics slightly, as you know, Prime Minister Kishida recently dissolved the lower house of parliament and called a general election. I was wondering if you could tell our listeners a little bit more about the election and kind of tie it back to the bond markets for us.
The lower house election is scheduled for October 31st. As we will wait for the outcome of the lower house elections, government financing will feel flush with cash, and BOJ will control JGB yields, despite not being able to adjust JGB bond operations, which have set for this quarter. Any increase in JGB issuances will likely be limited if additional economic measures can be covered by the government extra funds extended from fiscal year 20 budget. And JGB prices will likely depend on the MOF's debt management stance to extend JGB issuance durations. However, it is still hard to project any details related to additional economic measures and JGB issuance amount. We expect speculations in the market about expanded fiscal spending to grow further, and we feel yen rates will maintain their upwards bias.
Okay, so it sounds like a little too soon to call for any clear implications on the election, but certainly direction of travel seems to be for more spending in some form or fashion. Okay, great. So why don't we wrap things up? Again, let's tie it back to the markets. Curious what the current outlook is for yen rate, spot dollar yen, and yen basis.
The yen weakening has been driven by yen selling Japanese importers as resource prices have surged. Hurricane Ida hit U.S. oil fields in September, and oil inventories slipped to the level of November 2018. Oil drilling equipment is expected to be back in operations in early 2022, and the EIA monthly report has pushed back the estimate for oil supply and demand to stabilize from January to March 2022. Oil prices will likely remain high for the rest of this year. We see upward euro bias for dollar yen over the near term, with trading in a 2 yen range between 112.50 to 114.50. The yen yield curve has risen slightly. The lower house was dissolved and election campaigning began last week. The manifestos of both ruling and opposition parties contain policy ideas for reducing taxes and paying subsidies, while there are no details about fiscal spending. or JGB issuances. Upward stresses on yen rates have picked up. We expect market speculation about the expanded fiscal spending to grow. We've seen an upward bias for yen swap rates. So far in October, yen basis appears to have widened, reflecting US dollar asset funding with yen basis for outward FDI, foreign direct investment, as well as foreign securities investing. 3 months dollar yen forward has continued to widen as overseas investors buy TDBs, ahead of Fed tapering drawing near in November. This is because Japanese investors' foreign bond hedging flows have been stronger than foreigners' flows. Japanese investors will continue to drive dollar yen basis. We expect yen basis to keep an widening bias.
Okay, great. I mean, it's been a heck of a move in dollar yen. Like, not, it was 110 not so long ago, all the way to 114. And interesting that you point out that it's really driven more by yen selling than dollar strength in and of itself. But to summarize, at these higher levels, you're neutral on dollar yen. You do have a upward bias for yen swap rates. Again, sort of driven by that fiscal story, and then you expect the dollar yen basis to continue widening as Japanese investor and company outflows outmatch overseas investor inflows. So great stuff, Sekido-san. Thanks for joining us. Really appreciate it.
Thanks for having me, John.
Thank you for listening to the MUFG Global Markets Podcast. Rate, review, and subscribe on Apple, Spotify, or wherever you get your podcasts, and reach out to your MUFG sales rep for any further information. Check back soon for more insights from the Global Markets Research Team.